Neil, it's great to see you, and it's
Great to see
pretty
you
shocking.
again.
I mean, Chevron's underperformance, what gives?
Yeah, it's really a function of execution. We've had a couple of issues at major projects. The first is in Kazakhstan, where we've gone over budget at Tengiz. It is a project that was initially slated to be $37 billion in capital, and it's been running closer to $45 billion. And in the last couple of quarters, they've had challenges in the Permian as well, as productivity has missed expectations. As we look at the back half of the year into 2024 and then into 2025, some of these headwinds start to move in their direction. Tengiz, the Kazakhstan project, is 98% complete. The Permian actually had an excellent second quarter, up 11% sequentially, and the commodity prices are firming up. And while you wait for these projects to come online, you get a 10% capital returns yield. That's a 4% dividend and a 6% buyback yield, which makes it interesting relative to the S&P 100.
Sure, and what would you say, we finally are seeing some catch up in crude, and I can't even quite figure out what that's about, because yes, some Chinese stocks are higher, but other big China exposure names like Starbucks are lagging. So what's going on behind crude's little uptick here? And it's bigger than little when people start noticing it at the gas pump in the weeks to come.
Yeah, from an equity perspective, we model $80 Brent through the back half of the year and then 80 next year as well. And so to see Brent up at $85 a barrel is a little firmer than we had anticipated, and that's a function really of demand. In July, the demand print hit a record level. We've seen strength in both OECD and in emerging markets. And you see that manifested in refining margins. We talked about that a few minutes ago in terms of the strength of retail gasoline prices. You're also seeing it in diesel prices. Typically, New York Harbor refining margins are $15 a barrel. Today, they're $37 a barrel. So we're in a very strong refining margin environment. It's causing refiners to run hard. It's pulling up the crude complex and creating some of the strength in the physical market, which it should accrue to the valuation of some of the refiners that we like as well,
True,
including Marathon Petroleum that reported today.
Yeah, you've got a couple of other names outside of kind of the pure plays, if you will. First Solar, Southern are on your conviction list. What's the rationale there?
Yeah, and so to Pippa's point, we need all of the above. We are going to need baseload nuclear in order to meet the long-term demand needs of a growing electricity grid. We're going to need renewables in order to transition effectively, and we're going to need oil and gas. And so if you look at the America's Conviction List compiled by our directors of research, the three natural resources names we have are Southern, which is behind Georgia Power, and behind the nuclear reactor that just turned on. Congrats to them. First Solar, which has an interesting play on the Inflation Reduction Act. And we just added Chevron in place of Baker Hughes as a catch-up trade, as we think the commodity price will firm up and these big projects come into service.
All right, Neil, thanks for your time today. Appreciate it.